Hi there, my name is Russ Horn. I am the creator, the developer of the Rapid Results method, and I'd like to welcome you to today's video. In this video, we're going to cover very briefly the three phases that a trader goes through. Now, we've covered this before in other videos, so we're just going to touch on this really quick. We're going to focus a little bit more on phase 3, and through phase 3, we're going to go on to the traits of successful traders. What is it that makes a trader successful? What do they have to have going on in their head? What kind of habits do they have to have? Next, we're going to look at what's holding you back. Why aren't you that successful trader? Believe it or not, the difference between you and someone who is very successful is minuscule. There's not a lot of difference. A couple of different habits, but we can point those out. And number 4, the critical tools in your trading toolkit. What's important? What do you have to take you from being held back as a successful trader to being that successful trader? So the three phases. Now, when you start kind of from ground zero and you're going to develop yourself as a trader, and then eventually the goal, the idea is to become a professional trader, that guy, that girl that can trade for a living, trade however you want to make whatever it is that you're looking for. It might not be to be a full-time trader. You might just be looking to pay off something, a mortgage, college, whatever the case is. You have a goal in mind, but when you start from the beginning, you experience a variety of phases. Now, phase 1 is the validation phase. This is the phase where we're just looking to see, is Forex trading really something that we can do? Is it something that is valid? Can we trade? Is it possible to make money? We've heard that you can make a lot of money trading the Forex markets. Is this really something we can do? So you go online and you start searching the internet and you're trying to find traders that have done it. You see proof, you see account statements, and this kind of thing. You're looking simply that trading is possible. You can make money. Now, the system, you don't have a system in mind yet. 7% is probably not even that much. I think I'm being generous. 7% system, 90% validation, 3% mind. Phase 1 triangle that you're looking at there. Now, the mental game, you don't even consider that. That is not something you've even heard of at this point. You've vaguely heard of a trading system. You might have some kind of concept what that's about. But generally, phase 1, you're just looking for some kind of validation. Now you've decided, yes, we can make money trading. You go into phase 2. You make that transition from phase 1 to phase 2, and you're no longer looking for the validation. I've got it here as 5%. What you are looking for is a system. You don't know that emotional issues, emotional aspects are even possible yet. They're not going to get in the way. You're not paying any attention to any of that. That's why you've got 5% validation, 5% mind, 90% trading system. At this point, you're buying systems, you're developing systems, you're looking for free systems, you're mixing and matching systems, you're compiling them, you're putting them all together, you're looking for the ultimate indicator. You think that you're on track to find the holy grail, that indicator or the system that never loses. You spend a lot of time with this, a lot of late nights, you're getting behind in work. You know, these kinds of things because you're so focused on the trading system. And now from phase 2 to phase 3, it happens gradually, and there's a blendy area in there. You go from phase 2 into phase 3 where you have some systems that work. You know they work quite well, but you're becoming the issue. You're the reason why these systems that actually do work aren't working. You've determined in phase 3 that you do have some problems when it comes to trading. Not so much the trading system anymore, but you find that you're hesitant to take a trade after a loss. You find that you try to pay too much attention to what other people are saying and not really paying close enough attention to what your trading system is telling you. You are taking your profit way too soon. You're letting your stop loss hit the initial stop loss, like you're letting the market turn around and hit the full risk, or you're removing your stop loss altogether. You're doing these things that you know you shouldn't be doing, but you're doing them anyways. If you're in a winning trade, for example, you're going to keep moving your take profit. There's going to be points where the market hit where your take profit would have been, but you won a little bit more. You won a little bit more, and you should have gotten out. The market has changed direction. Come back towards your entry level, and you're thinking, I should have taken profit where I had initially determined. These are phase 3 trader issues. So let's look at the 10 traits of successful traders. Why are these traders successful? And every trader that gets into this, any person that gets into trading, can be a successful trader. So let's take a quick look at the 10 different traits. I've got 5 listed here, 5 on the next page, and we'll discuss them very quickly. Discipline. This may be the biggest trait, and you can learn this, is discipline. A successful trader is a disciplined trader. They follow the rules. They pay attention to the trading system. They don't get distracted. They have a window of opportunity. They're looking for the right setups. They don't take the shortcuts. They are very, very disciplined. They've got an outline. They have a set of guidelines or rules. There's a methodology, and they follow it to the T. There's no deviation from it. They've discovered that it works and that this is how you make money, and they become laser focused when it comes to sticking to those rules. Number 2 is independent. You have to be independent if you're going to be successful at this. You can't depend on anything other than you and your ability to trade the system that you're using. You don't want to pay attention to the news. You don't want, like the news that you see on TV or hear on the radio. You don't want to pay attention to what other traders are saying. You can, of course, listen to it and make your own evaluation, but you, in the end, are responsible for your trades, your decisions. You have to be 100% independent trader. You are accountable to yourself. You are the one that pulls the trigger. You're the one that makes the trade. You have to be that independent individual. Number 3, managing risk. Now you want to manage the risk as best you can. You never want to let a trade either hit your stop loss or hit your take profit. You want to manage the trade in a way that that risk is reduced, and you want to do it as fairly quickly as you can. You don't want to allow the maximum loss occur on any trade. You want to manage your risk. You want to lose as little as possible. Really successful traders are actually risk averse. They hate risk. They don't want to risk anything. They're scared of the risk. They don't want to lose what they're putting on the line. And this sort of mentality, this risk averseness, is what's going to help you manage the risk. And the less you lose on a losing trade, the less you have to make up for. And this really does contribute to the bottom line. The less you lose on the losing trades means really the more you're gaining when you are winning trades. Number 4 is treating trading like a business. You have to take trading seriously. This is not a hobby. This is not something you do for fun. Not if you want to make a go at this. If you really want to make money and pay off the car loans, the college, the house, whatever the case is, early retirement, you have to treat this as serious as you would treat any other business. This is the opportunity that you are looking for to make money, just like you'd start any kind of business. You're going to manage it like a business. You're going to treat it with the respect it deserves because it is a business. You're responsible for everything that goes on in your trading account, the way you select your trades, and so on. You have to focus on your trading like you would any other business. Number 5, this might be one of the top 2. This is huge. This emotional stability, and what that means is that you're not going to allow fear, you're not going to allow greed hesitation. You're not going to allow these kinds of things interfere with your trading. Once you have got that discipline down and you've got your stop loss and your take profit and you know how to manage the trade, that if that trade is a loser, and you're going to have them, that you are not going to hesitate taking the next trade. Or you're not going to remove your stop loss because you're afraid that if you close the trade at a loss, then you've lost and you're wrong. I mean, no one likes to admit that they're wrong. This is an issue. This is an emotional problem. If you have that emotional stability, then you don't have to like the losses and you can really enjoy the wins, but you're not going to be overboard. You're not going to be manic depressive, as it were. You're not going to really be upset about the losses. You're not going to jump for joy and be super ecstatic over the wins. You kind of take it in flow, in stride. The losses are going to happen. Don't let them put you off the next trade. Don't let them keep you from making sound judgments, sound decisions the next time you see a perfect setup. Being emotionally stable really is the key to success. It's going to allow you to follow the rules. It's going to allow you that better discipline. It's going to allow you to manage the risk, because if it doesn't work out, if the trade is a loser, it's not going to be a big deal and it's not going to prevent you from taking the next trade. Number 6. A trait of a successful trader is a trading plan. Now this is important. Now a trading plan is more than just a series of rules that you trade by. Your take profit, your stop loss, your entry criteria, all of this stuff is part of the trading plan. But a trading plan should also include short-term goals, medium-term goals, long-term goals. What ultimately do you want to do as a trader? What are you looking for? What kind of results do you want to get? What kind of time frame are you looking at? What do you want to achieve over the next month? What do you want to achieve over the next year, over the next 2 years, over the next 5 or 10 years? You want to have these goals in mind so you have some kind of direction. Without a direction, you really don't have that compass. You're not going to be as successful a trader as you would otherwise be. Number 7 here. A successful trader trades what they see, not what they think. Now that's a big deal. Too many new traders are trading with their gut, or they're trading what they hear, or they're trading anything that's not on the chart. They're looking at their chart and they're thinking that they are smarter than their trading system. Now the markets have a tendency to occasionally trend a lot further than we think they should. Now there's that key word. Traders think that there should be a certain amount of time that it trends, it reverses, it comes back. You don't trade that way. You don't trade because you think that it's time for the market to reverse, or you don't trade because you think it's time for the market to trend. You take a look at what the market is doing. You take a look at the signals, at the system. What is the system telling you? This is what you're trading, not a gut instinct, not a gut feeling, not what you assume is going to happen. These are all essentially 4-letter words. You want to trade what you see, not what you think you should be seeing. Number 8, successful trader will accept their mistakes and they will learn from their mistakes. If you keep making the same mistake over and over, you're never really going to improve. You want to be learning from your mistakes. This is an evolution. This makes you a better and better trader. Now, mistakes are going to happen. You can kick yourself once, get over it, learn from it, and try not to make that mistake again. Now, you are going to have these mistakes. Of course you're going to have. We all do. And we sometimes make really stupid mistakes. It's whatever. It's what it is. Learn from that mistake. Accept that you made a mistake. Don't beat yourself up over it. It's a lesson. You've learned it. Move on and continue to trade. Hopefully without that particular mistake. You're going to make more mistakes as you go. But if you can accept it and you can learn from it and not beat yourself up over it, then it's a lesson, and it's a lesson learned, and we really do need to learn these lessons. If you don't make the mistakes, how are you going to get better? You have to know the the bad in order to profit from the good. Number 9, a successful trader is a persistent individual. This means they will keep at it. You're in phase 3, so things aren't working out the way that you really want it to be. Now, the difference between a trader that fails and a trader that succeeds is persistence. Every trader that succeeds was at one point where you are now, a failing trader. Now, you might not be the failing trader, but most people will be. If you're in this phase, you're not doing as well as you'd like. It's that persistence. It's that wanting to keep moving forward, that desire to keep learning. You have to be doing something every day. You want to be persistent. You don't give up. You take your knocks and you keep moving forward. This is going to be where the breakthrough happens. If you keep moving forward, then you are going to cross that boundary, that wall. You are going to be persistent enough to become that successful trader that you really want to be. And number 10 is the top traits of successful traders is they believe in themselves. They know that they can do it. There is no question that they can do it. It's a tough go in the beginning. It's really hard. It's really frustrating. You don't understand everything. You can't see why you're failing. These kinds of things are only stumbling blocks. If you believe in yourself, you know it can be done. You won't take no for an answer. You know the power is within you. You are absolutely going to become that trader that you know you can be. The persistent, you believe in yourself, you learn from your mistakes. All of these things are critical. They're crucial for you to become that successful trader. Now, what's holding you back? Why aren't you all of those things? Why aren't you that successful trader? Now, the top 5 reasons, and you can probably think of more reasons, and there are, but these are some of the best reasons why you're not getting to where you're going. Now, emotional distress. This is every phase 3 trader goes through this. Now, emotional distress. Now, I'm not talking about having a breakdown and those kinds of things, but there are emotional controls that are keeping you from doing what you should be doing the things that you know you should be doing. You're not taking the profit off the table when you should. You're letting losses run longer. You're not taking the next trade simply because the last trade you took was a loss. I mean, these kinds of things. This is why you're not able to move forward, is you're really a victim of your own emotions. You're a hostage to emotional uncomfortableness. You don't want to take the next trade because you're trying to avoid the pain of being wrong or avoid the pain of the next losing trade. This kind of thing. You have to get over that. You don't want to be a slave to those kinds of emotions. Number 2, a reason why you're not being successful is you don't have the confidence in your system that you should have. You haven't back-tested it. You haven't traded it on a demo account long enough. You really don't know the ins and outs of your system. So what's going to happen is you're going to have a couple losses. You might start out really well even, but then you'll have a few losses and then you'll start to doubt your system. Does it really work? I've had a couple losses. I don't think it works anymore. You're not confident in your system. You haven't seen it go through the tough times. You don't know that if you had 2 losers in a row, there's a huge probability that the next one's going to be a winner. You just don't have that kind of confidence. You haven't back-tested it. You haven't traded it in a real environment long enough to really understand how your system works. Now, what happens is you're going to want to move to another system. And you're going to suffer this same kind of distress in this new system. You're going to have a couple losses, and this exact same scenario is going to play out. You're going to wonder if the system's good. Does it work? Yes, no, probably not. So you're going to move on to the next one. And this is a vicious cycle. It keeps repeating over and over and over. I have known traders that have been trying to do this for 15 years, and they are still not successful because they keep changing their trading system. They have a new system every other month and they can't learn it well enough. And every single system that they've had could very well have been a profitable trading system, but they never got that intimacy. They don't know the ins and outs of the trading system, and it's preventing them from being successful. Number 3, what's holding you back? You don't have the confidence in yourself. We discussed about having that belief in yourself. You might doubt your abilities to trade the markets. Now, trading the markets isn't hard. They're going to have you believe it is very difficult. And when you start, it is. But that's not because of you. It's because of what you know. If you don't know something, you're going to learn it. And this is all going to add to your confidence. This is going to add to your ability to manage your trades, make good trading judgments, make good trading calls. You stick with the system. You can do this. There is no question. I've seen it so many times where a trader comes from nowhere, starts at the very bottom, and becomes a profitable trader simply because they believed they can do it. And that really is all you need. Once you believe that you can do it and failing isn't even an option, then there is nowhere else you can go except to success. You are going to do it. You need to have that self-confidence. But if you're doubting yourself, you think you've got a great system and it's not working out, maybe you need to change the system, but it's not really you. If your system is losing, it's not you that's losing. It's the trading system. Now, for the most part, if you have a great trading system, you are going to have some losses. There's no question about that. But don't doubt yourself. When you look back at the rules, you look at the trade. How did you do? How did you perform? You followed the rules. You took everything into account. The trading conditions, the market conditions, and so on. You're doing great. This is you being a good trader. This is not you that's losing. This is not you making bad decisions. This is not you that can't do it. This is you trading. This is what the market is all about. It's got nothing to do with you. As long as you are doing what you're supposed to do, you've got the discipline, you've got the rules laid out, and you're following them, you should be very confident. You can do this. Anybody can do this if they decide that they can. Number 4, what's holding you back? Too many traders are focusing on the money and not the process. This isn't a get-rich-quick scheme. You're not going to make a ton of money overnight. It can't happen. You just can't do it. I've talked about being able to make a lawyer's salary. You wouldn't expect to be able to make this kind of money and not know anything about the law. This is essentially what trading is like. You can't jump into this and expect to make a ton of money, especially if the money that you want to make is important. If you have to make the rent, if you have to make the mortgage, if you have to make a payment of some kind, and you're depending on trading to do that for you, they call that scared money, and scared money is lost money. You are not going to turn it into anything that you can use. If you're focusing on the money, I need to make so much money, there's almost no chance that you are going to make the money. You have to focus on the trading. You have to focus on the process. You have to focus on the system. Don't worry about how much you're pulling out. Worry about your stop loss. Worry about your take profit. Worry about the lot size and all of that stuff. But that is the trading, not the money. And at the end of the day or month or week or year or whatever the case is, the money is going to show up. Focus on trading and the money will show up. Number 5, the reason a lot of traders aren't getting where they want to go is because they really don't have a destination. They know they want to make money. They know they want to make a lot of money, but that's it. They don't know how much they want to make over this amount of time. They have no real trading plan. They haven't considered the growth rate. They haven't considered the monthly return. Where are you going to be 2 years from now? They don't have any of this in mind. They just want to make money. End of sentence. Period. They just want to make money. Now that's not really a goal. A goal is a little more elaborate, a little more focused than that. If you have no trading goals, you don't have a trading direction. And if you have no direction, you don't know where to go. So the critical tools in your toolkit. What do you need? The 5 crucial elements to succeeding as a trader. Successful traders have this down. They know all about this because this has helped them become successful. Number 1 is a trading plan. Now, we just talked about that at length. Having a goal, having a trading plan, having a trading system, having a month by month, year by year kind of attainable, realistic profit objective. These kinds of things are really important to your success. If you've got a map, you can follow the map and you can get to where you need to be. If you don't have a map, getting to your destination becomes really unlikely. Know your trading system. This is number 2. You have to know your trading system inside and out. What this is going to do is foster some confidence. You are going to understand, okay, I am going to have losses. If I trade in this kind of condition, I'm going to lose. This is what I'm looking for. If I have 3 losses in a row, I've never had 4 in a row, I'm very excited to take this next trade. These are the kinds of things. You have to understand your trading system. You have to know your trading system inside and out. You have to be able to look at your system on a chart and assess it very quickly. You want to really understand what it is you're looking at. If your trading system leads to questions, if it leads to not really knowing what side of the market you're on, if you should be going up or down, you have to spend a little bit more time getting familiar and understanding that system inside and out. Number 3 is accept losses as a part of trading, and they really are a part of trading. I can't stress that enough. You are going to lose. The market fundamentally has so many factors that make it move up and down that we're trying essentially to ride probabilities. There are no certainties, only probabilities, and that is a saying that I hold dear. There's no certainties, only probabilities. And we're looking at a trading system with higher than average probabilities, and that means more than 50%. Now, that means that you're going to have less than 50% losing trades. It's going to happen. You have to accept the losing trades as part of trading. If you can't accept the losing trades, if you feel victimized by the market, if you feel like the market is out to get you, if you feel like you're the one doing something wrong, if you feel like your trading system doesn't work, if any of these things ring true and you feel like these losses you have are directed at you personally, you really can't become that successful trader. These successful Forex traders, they really don't care. They have a loss, they move on to the next trade. They have a win, they move on to the next trade. They understand their trading system, they know what the win, what the loss ratios are, and that all gets clumped together. And at the end of the month or the end of the year, it all gets kind of weighed. But one loss, one win doesn't mean anything at all. It's the combination of all of that over the course of 100 trades. That's where wins and losses start to count. Not one at a time. They don't exist one at a time. They shouldn't, and they shouldn't affect you one at a time. Risk management, this is number 4. This is really, really important. You have what's called an initial stop loss. You're going to place a trade. You're going to put your stop loss. This is the most money that you're going to risk. Now, the objective here is never to lose that entire amount that you're risking. You really want to manage this risk. And what that means is get out of risk as soon as you can. You want to, and it doesn't have to be to break even right away, but you want to take that 100% that you're risking. If you're risking $100 on the trade, for example, you want to manage that trade in such a way that the risk becomes 90%, then 80, then 75, and so on. You want to limit it. Now, risk management also will come down to how much you're risking on a trade. You don't want to risk 20% of your trading account on a single trade. That is not good risk management. I settle for 2%. 2% of my account I risk per trade. Now, this is good risk management. I can sustain quite a few losses in a row without a huge impact on my trading account. This is an important part of risk management as well. So it's not just eliminating or reducing the risk per trade, but being able to stay in the game. If you've had 10 losses in a row, that you're not going to be blown out. You're not going to be done. You want to limit the risk. You want to control the risk. That really is one of the few things we have control over, is how much you're risking per trade, when you can reduce the risk in a trade. Number 5 is emotional control. Now again, I'm going to say this, and I say this all the time, you've probably heard me say it, is you don't have to like the losses. You don't have to be dead inside. This isn't what we're talking about. What emotional control is, now you get kind of more and more like that, but when you're starting out, I mean, the losses are going to happen, and you're not going to like them. Nobody likes losing money, no matter what they tell you. But what's happening is you can't let it change anything. You can't let it change the way you trade. You can't let it change the rules of your system. You can't let it change the kind of setups that you're taking. You can't make you aggressive. It can't make you want to get revenge on the market because it did you wrong. None of this kind of stuff. This is emotional control. You can clear-headedly evaluate the market. You can, with a clear head, take a trade, manage the trade, get stopped out, and then move on to the next trade without carrying that baggage from the last trade to the next trade. Oh, I got stopped out on the last trade. I'm very hesitant to take the next trade. We all go through that, but you can't let that happen. The guys that make this work, the ones that are very successful, this isn't a problem for them. They can lose 20 trades in a row. They have experience with their trading system. They know it's going to work. They know it's going to pay off. They will keep taking the next trade. They will not allow their emotions to sabotage what they're doing. And this can also be for the positive, like the gaining side of stuff. When you are winning a trade, you don't want to get cocky. You don't want to get an ego. You don't want to be just so overwhelmed with greatness that you can't lose. I mean, this is just as bad. Once you start to become overconfident, you're not going to follow the rules as closely anymore, and it is going to turn around and bite you. So you want to maintain your composure all the time. You want to be humble. You want to be persistent. You don't want to let the losing trades, you don't want to let the bad trades, the missed trades. How often have you seen a trade that you just missed and it went really well? How often have you seen a trade hit your stop loss at break even and then take off to hit your take profit? I mean, we've all been there. We've all seen that. Don't get too upset about that. Okay, whatever. It was a trade that didn't go exactly the way I wanted. If I had done this, if I had done that, don't let those creep in. Don't let them make you change what you know works. That emotional control is critical in your trading success. I wanted to say thank you for watching this video. This has been an excellent little bit, excellent time that I've spent with you, and I really do enjoy this. Stay tuned. I'm going to send you another email, and we're going to show you a quick peek in behind the scenes, as it were, of the rapid results method. The traders are doing extremely well, and we've already made some changes. Things are really progressing behind the walls of the rapid results method, and things are really getting good. Again, you may have heard we've got a competition going, and the traders are doing exceptionally well. We're going to give you kind of a sneak peek inside, behind the scenes, see what's going on, how the whole thing's working out. So look for that email. It's going to come to you the next day, couple days, 3 days, whatever the case is. So pay attention to your email. You're going to want to see that. So you take care. Again, thanks for spending a few minutes with me, and we'll see you next time. Bye-bye.